All right, in this video, I'm going to share how a Section 8 BRRRR method deal works. I'm going to show you a live deal that I'm working on right now with a client. I'm going to share the numbers, and I'm going to walk through exactly how this works so that you can make money from this as well. Now, the BRRRR method stands for, if you don't know what it is, it was a term created by a guy named Brandon Turner. He used to be the host of the BRRRR podcast or show, and BRRRR is like one of the biggest real estate investing forums out there. So he coined this term. It stands for buy, renovate, rent, refinance, and repeat. Now, what I do differently, and this is how I built a multi-seven-figure portfolio with 6 figures a year in net cash flow in around 2 years. The thing that I did differently was in the rent step around this, instead of just taking a normal tenant, I will go out and I will find a Section 8 tenant because we get much higher rents and the rent is paid by the US government. So it's consistent and it's guaranteed and it's paid every month, or at least a large portion of it is paid by the US government. So we can get higher rents through Section 8, and it makes a BRRRR deal a lot easier to find good deals if you know where you're looking, you know what you're looking for. So I'm going to walk through a live deal that I'm working on right now with a client, and I'm going to explain how it works. Now, I get sent deals pretty much every day. I help clients get into these deals and to basically go through this process, get a Section 8 BRRRR rental property and get this type of property for themselves and build a portfolio around this. So this particular deal, it was sent to me. It's an off-market deal. So if you go on Zillow or Redfin or whatever, you're not going to find it. But the purchase price is $65,000. Okay, $65,000. It is a 3-bedroom, 1.5 bath, and I sent it over to my contractor. He took a look at the pictures, he took a walk of the property, and the rehab is going to be around $60,000. Okay, so it's almost the price of the house here. Now, closing costs in this case, I just put 2% here. Sometimes it's more, sometimes it's less, depending on how you purchase. So we'll probably purchase this one in cash and put the rehab on a credit card. So closing costs, it could be more, it could be a little bit less. So down payment, we're just taking 20% of the purchase price, so that's $13,000. And so if we were to finance this, where we put 20% down and we have the closing costs, we would need around total capital around $74,300. And this could be a mixture of your own capital and credit cards. If it's a rehab, you can often put rehabs on credit cards and you can fund it that way. There's also 0% interest business credit cards, which I talked about in my last video. So go and watch that, and that's how you can fund an entire deal from the purchase of the house to the rehab using 0% interest business credit cards. So we have the total capital required is $74,300. So those are the purchase overview numbers, and now the loan terms. So this is assuming we put 20% down. So the loan is financing the remaining 80% of the purchase price. We have an interest rate of 7%. So the loan amount is $52,000. This means the monthly payment is around $346 a month. For monthly expenses, we have property taxes, we have insurance, water and sewer. For Section 8, I usually as the landlord will just put the water and sewer under me because then I don't have to chase the tenants for it. And also, Section 8 will pay higher if you don't have the water and sewer under the tenant. So I just put it under myself because if I put it under the tenant, I still have to go and chase them around to make sure that they pay it. So the water and sewer is under me. Now, management, this is property management. If you use a property management company, I do for some of my properties, but I also self-manage a large portion of my portfolio because I get tax benefits as a real estate professional. And I just don't find it that difficult. So management in this case would be 10% of rents. So if I actually had someone else do it, like a property management company, then I would be paying 10% of this, which would be $204 a month. Now, repairs and capital expenditures. This is like repairs that you make over the year or any big fixes that you have to do. I account 10% of the rent as well for repairs and CapEx. So these are the monthly expenses. Now, if you don't use this on repairs and CapEx, then this just goes straight back into your pocket, okay? But we want to keep it aside just in case. Now, with all of this in mind, so we have the Section 8 rent, and now I'm going to show you exactly how you find this. So it's going to depend on where you invest. This particular property is in Ohio. It's in a county called Cuyahoga County. This is where Cleveland is. And so if we go to the Cuyahoga Housing Authority site, you can see here, we're going to go down and they have the payment standards. So they update this every year, and typically it goes up. So every year you can actually request rent increases as well. I'm going to find my zip code in this case, which is 44125 for this deal. And the bedroom count is 3 bedrooms. And on the max end, CMHA, which is the Cuyahoga Housing Authority, they will pay up to $2,052 for a 3-bedroom house on the Section 8 program. So if we go back and we look at this, that's how we got this number. I need to change this a bit to 2,052. Total expenses pulls from this and all of this. So we have $886 a month. And now we have the estimated net cash flow. So after all the expenses, if we take the Section 8 rent and we minus expenses, we have $1,165 a month in net cash flow, which is a cash-on-cash return of 18.83%. So this is pretty solid. Usually if you're getting like 10, 12% cash-on-cash return, you are doing very well. But we can get a lot higher with Section 8 rents. Now, we're not done. This is a BRRRR deal, meaning we don't want to leave just the $74,000 in the deal, because we need to take that out and we need to buy more properties and build our portfolio. So now what we look at is this part of the calculator, which is the BRRRR calculator. So this is looking at once we go and fill the property with the tenant and we go and refinance, can we pull our money out? So now we're looking at this. The ARV stands for after repair value, which means if we look at the zip code here, 44125, and I go to sold over the last year, and I go to 3 bedrooms, I'm going to do home. So I'm looking on Redfin. I'm trying to see what houses sell for that are similar size and similar condition. So I can go to filters. I'm also going to go here and do square feet. This property is around 1,500 square feet, so I'm going to do 1,600 here on the max square feet. And let's take a look. So I know the property is, it's in this area here. So if we go and let's just hit refresh here. Okay, there we go. So if we go in, we can now see, we can see what properties sold for in the last year that fit our criteria. So 3 bedroom or higher, 1,600 square feet or less. And you can see, we can also sort by high to low, and we can see what they're selling for. So I'm looking at this. This is actually very similar to the one that I was sent. This one's in better condition, but this is really good to see, right? $190,000. This just sold for, on August 11th, so pretty recent. Almost $190,000, and it's actually smaller, and it's pretty close to the property that I was sent that I'm working on with a client. And to get it to this level, that's actually what we're paying the $60,000 in rehab for. So if we look at this, I took a conservative number just based off of like comparing 10 different properties that are similar condition. I'm using $160,000 in ARV. Okay. Now what happens is when you go and do a refinance, the lender will look, they'll send an appraiser out, and they're going to look at the home and they're going to give it a new value. So this would be the estimated new value. We don't know for sure until we actually go through this process, but we can have a pretty good idea if we look at Redfin or Zillow and see what houses have sold for that are similar size and condition. So our old loan, if we are financing this, would be $52,000 as shown here. Our refinance interest rate is going to be a bit higher, so I put 7.25% here. The new loan amount, this is 75% of the ARV, so we have $120,000. Our new monthly payment based on the new loan is $818. New total monthly expenses, we would take this and this here, and we would add these. And then the refi closing costs are estimated $2,400. And this is then going to show us how much capital after we refinance are we going to have left in the deal. So this is a big improvement, right? We went from having $74,300 in the deal to now having $8,700 left in the deal. Now with these new numbers, so originally we had an estimated cash flow of $1,165 a month, and then we have $693 a month now after the refinance, which is still really, really good because we only have $8,700 left in the deal. Now, in some cases, you're going to have a grand slam deal, and that could actually happen on this deal if it appraises for higher, where we're going to have no money left in the deal and we have infinite ROI. Okay, so this is showing us how much money we have left in the deal. We have estimated cash flow of $693. We have an annual cash flow of and this is profit, right? Cash flow means profit. So $8,318 and a cash on cash return of 95%. This means that we're going to pay we're going to make ourselves whole again and pay back our capital left in the deal in a little over a year. Okay, so if we have cash out at refi, meaning that we have capital left over after we pay off our old loan, then that's going to show in this cell here, but we don't have it in this particular deal. But this is a very, very strong deal because now we are cash flowing $693 a month, and it's only going to take us around a little over a year to pay back the capital left in the deal, and from there it's going to be infinite ROI. Okay, so this is an example of a BRRRR deal. Sometimes you will get all of your cash out and more. In this case, we got most of our cash out where we can then pay the capital left back. We can make ourselves whole again in around a year or a little over a year. And then we can take that capital and we can also buy another deal. And so the whole point of this method is you are recycling capital. You're using it to purchase property. You're using it to do a rehab. You put a Section 8 tenant in there to get much higher rents. So if you can see this, $2,052 in rent on a house that costs us all in around $125,000 with the purchase price and rehab, that is very, very strong cash flow and very strong rents. You're not going to get this at normal market rents. If it was a non-Section 8 tenant, this would probably be closer to like $1,000 to $1,200, okay, if that. So we use Section 8 tenants to get a much higher than market rent, and we then do a refinance and we get most of, if not all of our cash out, and we can take that capital and repeat this process over and over and over again. Okay, so this is the Section 8 BRRRR method. This is a deal breakdown. This is one that I'm actually working on right now, and one of my clients is going through the process. They're putting in an offer, and they should be closing if they get the offer accepted over the next few days or so. But if you want help with acquiring properties like this and doing these Section 8 BRRRR deals, and you want to work with somebody that already specializes in a certain market and has a team built out and can help you move really, really quickly to help you build your real estate portfolio, then go to the link in the description. Go and watch that video. It's going to break down exactly how this works. And go and watch some of my other YouTube videos as well that breaks down deals and this entire process. But I'd love to help you build your real estate portfolio as well. So go ahead and click that link if you're interested. Book a call. You'll talk directly with me, and we can help you build a portfolio like this for yourself, 100% remote. But I hope that was useful for you to see. This is the Section 8 BRRRR method, and I'll see you in the next video.